Rolex prices have crashed from their speculative peaks. These are the models that built their reputations on commanding massive premiums over retail price, and now they are trading at discounts that would have seemed impossible just 3 years ago. The gray market bubble that saw some watches sell for triple their retail value has officially cracked, and the data reveals exactly which models are bleeding value first. The numbers tell a stark story. Between March 2020 and March 2022, what industry insiders called an incredible bull run saw Rolex prices skyrocket up to 300% above retail. The Daytona reached an absolute peak of $53,911 in March 2022. Today, that same watch trades in the mid-$30,000 range. The Root Beer GMT Master 2, which commanded a $1,800 premium just last year, now sells for $500 less than its retail price of $18,150. This is not just about a few isolated models taking a hit. According to Morgan Stanley's latest analysis in partnership with Lux Consult, secondary market Rolex prices have dropped to 4-year lows, falling not just below their 2022 peaks, but 3% below levels last seen in January 2021. Charles Tian, founder and CEO of Watch Charts, puts it bluntly. He says there is generally greater Rolex availability on the primary market, and that primary market demand is waning because of both decreased speculative purchasing and decreased organic demand. The carnage is specific and measurable. Let's start with the models that have crossed the psychological threshold of trading below their authorized dealer prices. The white gold Daytona, reference 126,509, has taken the hardest hit. While its market price stayed remarkably consistent at around $44,700, Rolex hiked its retail price from $44,300 to $51,800 in January. The watch now trades at a significant discount to retail, making it cheaper to buy on the gray market than to walk into an authorized dealer. Two-tone submariners tell an equally brutal story. The 126613LN with the black bezel saw its market price drop 7.5% to $14,800 over the past year, while its retail price climbed to $17,600. The blue bezel variant, the 126613LB, trades at around $16,000 against the same $17,600 retail price. These were not supposed to be discount watches. These were models that commanded wait lists and premiums for years. The Explorer 2, reference 226,570, in black now trades slightly under retail, while the reference 126,900 Air King sits essentially at retail after years of commanding secondary market premiums. Even the yellow gold Daytona, reference 126,508, which comfortably traded below retail last year, now sees its premium shrink to less than the sales tax in most states. Then there is the full yellow gold GMT, reference 126718 GRNR, trading at just shy of $40,000 compared to its $44,600 price tag. The rose gold Daytona on a gold bracelet, reference 126,505, which traded about $5,000 above retail last year, now trades for a few $100s less than its retail price. Meanwhile, sister brand Tudor models are trading roughly 40% below retail, making the Rolex correction look conservative by comparison. But the models trading below retail represent just the tip of the iceberg. The real story lies in the dramatic premium compression across Rolex's most coveted pieces. The Steel Panda Daytona, the holy grail that drove much of the speculative frenzy, dropped from peaks above $50,000 to the mid-$30,000 range. That's still a substantial premium over its retail price, but it represents a loss that would devastate anyone who bought at the peak. Steel Submariners, which cost $10,650 at any authorized dealer, still trade for $12,500 to $15,000 in gray market channels. That premium sounds healthy until you realize it used to be 50% or more above retail. The compression is real, and it's accelerating. Industry observers note that steel premiums now sit in the 10 to 20% range above retail, compared to the 25 to 35% seen in 2023 and 2024. Interestingly, Rolex-certified pre-owned models command roughly 30% premiums over non-certified equivalents. creating a three-tier market structure that further complicates traditional gray market pricing. The timeline of this collapse reveals how quickly market sentiment can shift. The post-pandemic peak lasted from March 2020 through the first quarter of 2022. Cheap credit, global lockdowns, and limited production created a perfect storm for speculation. Austin Chu, founder of Hong Kong-based watch platform WristCheck, called it an incredible bull run that fed on itself until reality intervened. The correction began in April and May 2022, coinciding with broader market turmoil and the crypto crash. What followed was not just a gentle cool-down, but a systematic unwinding of years of speculation. By 2023 and 2024, the flippers had largely exited the market, leaving behind a more rational but dramatically different landscape. The data shows this is not uniform across all brands. According to year-over-year figures, high-end brands like A-Lang and Sony fell 5.3%, Breitling dropped 5.9%, Omega declined 6.8%, and Rolex fell 7.2%. Audemars Piguet took the biggest hit at 12.5%, while Richard Mille models experienced similar double-digit declines across their core sports watch lines. But Rolex's decline is particularly significant because of the brand's market dominance and the sheer volume of speculation it attracted. Morgan Stanley estimates a 19% year-over-year drop in watch sales on the secondary Rolex market. The Watch Chart's overall market index, monitoring 60 luxury Swiss watch models from 10 brands, experienced its 9th consecutive quarterly decline in the second quarter ending June 30th. This follows the peak reached in the first quarter of 2022. Chronopulse's Rolex index shows prices down 2.16% over the past year, with much of that decline concentrated in the first half of 2025. Over 2 years, the numbers become even more stark. GMT Masters dropped 9.7%, Submariners fell 11.1%, and Daytonas declined 12.9%, compared to a 9.2% decline in the broader Rolex market index. The human cost of this correction extends beyond disappointed speculators to the dealers caught holding inventory. A major metropolitan gray market dealer who held $400,000 in steel sports inventory in early 2024 now carries that same inventory at $280,000 in marked value, representing a 30% unrealized loss. Monthly carrying costs for insurance, space, and capital are eroding profitability, forcing rational dealers to clear inventory at 20 to 25% markdowns. Meanwhile, Rolex has continued raising retail prices, creating what industry insiders call the retail price trap. When the Submariner crossed the symbolic $10,000 mark at retail in 2026, it officially ended decades of the model serving as the benchmark for a sub-$10,000 luxury dive watch. A 2 to 3-year-old unworn Submariner now trades at $6,200 to $6,800 on secondary platforms, while retailing for approximately $7,400. The rational buyer chooses used, eliminating dealer margins entirely. This dynamic is accelerating across the brand. For Rolex, only 56% of models selling on the secondary market in January 2025 traded above their authorized dealer retail prices, compared to 68% a year ago. Steel sports models like the Daytona and Submariner have lost 30 to 50% from peak 2022 valuations, while Rolex keeps raising retail prices. The industry itself is consolidating around this new reality. Chrono24 announced it would cut 110 jobs, almost a quarter of its workforce. In Europe, Chronext entered voluntary administration after unsuccessful fundraising efforts and was acquired in December 2024. Among prominent pre-owned dealers, Hodinkee exited the secondary market entirely in 2024, just 3 years after getting into the business through its $46 million acquisition of Crown and Caliber. Yet not everyone sees this as a crisis. Paul Altieri, founder and chief executive officer of Bob's Watches, notes that his company's 15-year report is built on actual sales, not estimates. They have mapped every peak, correction, and rebound, giving collectors the real data they need to plan their next move. Pierre Dupriel, managing partner at Boston Consulting Group, argues that prices overall have definitely stayed much higher than they were pre-pandemic. He does not think this is a bubble bursting. The future trajectory depends on factors still playing out. Rolex is expanding production with temporary facilities in Romont and Villaz-Saint-Pierre, employing 250 to 300 skilled workers, plus a $1.1 billion factory in Bully, expected to commence production in 2029. According to Morgan Stanley and Lux Consult, The brand produced about 1.24 million pieces in 2023, its highest modern output. Wait times, the traditional measure of Rolex scarcity, are improving dramatically. Recent data shows that wait times for Submariners, GMT Masters, and Explorers are shorter than they have been in years. 2 years is probably the longest anyone would wait for a standard submariner from a typical authorized dealer, and an increasing number of collectors are getting them within weeks or months. The gray market premium that defined Rolex collecting for nearly 2 decades is not just cracking, it is fundamentally restructuring around new realities of supply, demand, and rational pricing. The models trading below retail today represent the leading edge of a correction that is reshaping how we think about luxury watch value. What seemed like an unstoppable force has met the immovable object of market gravity, and gravity is winning.